Hello and welcome to BQ Prime. A very good morning to all the viewers. You're watching Stocks in Focus and I'm Hiral Datia. One company that we have been watching out for is a Century Plywood. Clearly, the numbers have been in line with what the street was estimating. The revenues are up 10%. Margins have improved as well. However, that number is slightly below what the street was estimating. And in terms of the profit number, the Bloomberg estimate said 99 crores. The number has come in at around 97.1%. Let's welcome in our guest to understand the quarter as well as the trajectory going ahead. Keshav Bhajanka, Executive Director at Century Plyboods, joins in. Keshav, good morning and welcome to the show, and wishing you and the team a happy new year.
Good morning. Wish you, your team, and all your viewers a very happy Diwali. And thank you for having me.
Always a pleasure. Keshav, let's start with the numbers. Clearly, firstly, have they met your internal expectations? And number two, from a guidance perspective, you have maintained it with regards to all the three segments between plywood, laminates, and MDF segments. Uh, if you could help us understand what how is it looking like?
I think it was a relatively difficult quarter. On the ground, demand was not as robust as we have been used to in the recent past. Perhaps due to the fact that new launches that have taken place will take a little time before they reach the stage where our products are going to be consumed. Having said that, there was also sustained raw material pressure. I think under the current circumstances, we have done reasonably well, and we are very bullish on both the short and medium term as well as the long term, of course. The reason being that the housing cycle has turned. Being the market leader, we will benefit from both the spurt in real estate as well as the tendency to shift towards the organized market. And I think that the steps we have taken shall show results sooner rather than later.
Right. So clearly a difficult quarter, but moving into a bullish upcoming quarters with the real estate pullback that we are seeing. With all of this said and done, if you have to look at FY24 as a year, uh, clearly the revenue growth guidance has been maintained for plywood laminates to 10% and double digit as well, where increased MDF volumes is what you're looking at. So clearly, where is the growth expected to come from if you have to look at the various segments?
I think, like you rightly pointed out, we are looking at growth right throughout. A number of the initiatives that we have given are fructifying. Plywood, of course, has performed very well and continues to look robust. We have further cemented our position as the market leader, and this is not just due to volume growth, but the fact that we have been able to maintain our margins alongside volume growth, which for the rest of the industry has proven very difficult. It has been growth at the cost of margins, which is a step that we don't really foresee us having the need to take. MDF, the growth has been robust. Our new capacity has come online, and that is aiding our growth. As you know, till last year, we were under capacity constraint, and because of the same, we were unable to grow. With the Andhra capacity coming in for both MDF and laminates in H2, I am further confident of an uptick in growth, and the trajectory looks very good.
Right. So, with both of these aspects into consideration, let's look at a couple of other aspects in terms of revenue contribution. Are you expecting that mix to change, taking into consideration the capacity addition that we're seeing for MDF as well as laminates?
I think that the capacity growth for MDF is going to be substantially higher. As you have very correctly pointed out, we were at a 600 cubic meter capacity as of February of the current calendar year, and that moved to 900 plus as of March. And by March of the following year, we will be at close to 1900 cubic meters of capacity. So the scale in MDF is drastically changing, and due to the same, I think the contribution of MDF is likely to be higher. The pace of growth, as I've already mentioned, will look higher. Plywood and laminates, we are fairly confident that we'll meet our guidance and we'll be growing, but the pace of growth in MDF as a category is likely to be higher.
Okay. Uh, One question I have with regards to the MDF segment, Keshav, is that imports are also going up with regards to MDF goes, right? simultaneously, from a domestic perspective, you're already adding capacity. You have full conviction with regards to that segment as well. How does that stack up for the domestic players and a company like yours with imports also increasing? Or is it a situation where the demand is such that the domestic players are not able to meet the demand and hence the imports?
I wouldn't really say the demand is at a stage where, it is so robust that all the
Hmm.
new capacities will be absorbed immediately and imports can scale up drastically. Having said that, setting up a capacity and utilizing that capacity are two different things. I think, in the past also we have stated that in MDF, it takes a relatively longer time to utilize the capacity, but we have been, well, by virtue of being the market leaders in various segments, we have been able to ramp up capacity far faster than others. Now, steps like the introduction of BIS in MDF, which is likely to come into effect from February of next year, are further likely to, to restrict the imports as opposed to domestic manufacturing. So I think we have substantial tailwinds. Going forward, we remain fairly confident that within the first 2 years, we will reach 80 to 90% capacity utilization for the capacities that we are bringing in.
Okay. And if you have to look at the other part of the business from the timber part of the business as well, uh, how is the price trend looking like? Because clearly in the second quarter there was an uptick. Again, third quarter you've seen some bit of softening that has happened as well. So what's the trajectory looking like and how does it impact business?
I think, that's a very difficult question to answer because I'm not an economist. But having said that, yes, you're completely correct. Second quarter, there was a spurt. This quarter, there has been a softening in timber prices. And we're hoping that timber prices, while they don't, further go up, but elevated timber prices are actually in our favor because this leads to a higher quantum of agroforestry. And as you know, agroforestry being the primary raw material behind our product categories is required if you want to scale up and grow alongside, other countries, for example, a China or a Vietnam. The agroforestry has been at a far more progressive state than India. So I'm hoping that, yes, the prices don't increase further. But I'm also hoping they don't soften too much because the incentive to the farmers would reduce. Currently, the quantum of agroforestry that is taking place is substantial and it bodes very well to our growth prospects in the long term.
Hmm. Okay. And from a utilization perspective, I think what 70 odd percent is where the this has been so far. How are you looking at it in terms of the second half of FY24 from a utilization perspective, and what would the capex then look like?
Um, we are, the capex is fixed. Like we have already guided, the Andhra projects are likely to come, both laminate and MDF are likely to come online by the end of the current financial year. The particle board project is likely to come online by the end of the next financial year. And I think utilization, the attempt will always be to ramp it up as quickly as possible. But the utilization will increase in line with the guidance that we have given.
Okay. So that's from a utilization perspective. Apart from that, if you see in terms of the overall capex, how much are you looking to incur in the next 6 months, and how does FY25 pan out?
So the overall capex that we are doing is across all our product segments. As you're aware, we are doing 700 crores in the capex in MDF in Andhra Pradesh, 200 crores in the laminate capacity in Andhra Pradesh. Um, I think 500 crores plus in the capacity in Tamil Nadu for particle board and 100 crores for the new plywood capacity in Hoshiarpur. And we are broadly in line with these estimates for the new capexes. This will be spread across this year and next year. So it will depend on how fast we're able to set up the capacities.
Okay. And my last question, Keshav, coming to you is with regards to where hiving of the logistics division is concerned. That has been approved by the NCLT. What's the next step and how are you looking at it?
Our objective has always been to generate, value for all our stakeholders, including our shareholders. So I think when we get a good valuation for the logistic entity, because it remains a fairly robust entity, it remains a very very good asset that has been created, and now with backward integration, the prospects have suddenly become far better. So once the backward integration, once the operations at the berth at the dock start, I think we'll look at a very good valuation for the asset. And at that point, I think it would make sense to further consider divestment. Right now, at the current valuations, we are not very keen on divesting.
Right. So that's with regards to where the logistic business is concerned. Thank you, Keshav, so much for joining us on the show and sharing
Thank
your
you.
views. Clearly, this is one of the stocks, in fact, on the channel as well that we have been focusing on lately on the back of the real estate upcycle, wherein the ancillary companies are the ones that will gain to benefit overall. And, Century Plyboards could be one of the beneficiaries as well. And if you see from a stock price perspective, today the stock is seeing marginal gains. Again, on a YTD basis as well, 24% is the kind of up move that we'll see on a Century Plyboards. But moving on, Star Health. That's another one that we have been watching out for in terms of earnings. Clearly, if you see the gross overall from a Star Health numbers perspective, in the second quarter, the gross written premium is up around 17% on a year-on-year basis. The claims paid are up around 8%. Expenses have gone up. The PAT has seen a growth of around 35% at 125 crores as well. Let's welcome in our guest to understand more. Joining us is Nilesh, Kambli, CFO at Star Health and Allied Insurance. Nilesh, good morning and welcome to the show, and wishing you a happy new year.
Thank you. Same to you. Happy New Year and Happy Diwali.
Thank you so much. Nilesh, clearly in terms of the quarter, has that met your internal expectations?
Yeah, so typically quarter two for a health insurance company is seasonally weak quarter because of the higher losses that come through epidemics, fever and infectious diseases. It was slightly above our expectations, and hence we have given a guidance that our overall year-end guidance might be slightly pushed up on the loss ratio side.
Okay. So what are you tracking? What's the number that we should be watching out for?
So in terms of growth, we have grown by 18% in line with the market growth rate. Our overall expectation is 20% growth in the near and long term. So that's on the growth side. We'll continue to grow higher than the market growth rate and continue to build on our market share. In terms of combined ratio, we don't want to give any guidance. Last year we had closed at 95% combined ratio, and we would continue to do well and try to expect that it keeps on doing well.
Right. Clearly, the claims and the expense ratio has been higher this time around. Overall, the guidance that you've given earlier has been around 63 to 65% with regards to the claims ratio. How elevated do you think it can get as compared to the guidance from here on, taking into consideration the higher risk of fever, respiratory diseases that you've mentioned have been impacting this?
See, as of now, we would not like to give any forward-looking number in terms of loss ratio. What we would like to comment is we are building a long-term sustainable business model. All the factors that we are considering in terms of agency, digital, banca are performing well in terms of addition of partners, addition of agents. Digital, we have gone live with vernacular websites. The growth in business also of 18% is by choice. If we take some calls, we can easily grow higher, but we don't want to do that. We have curtailed certain business in loss ratio segments, loss ratio locations, to have a sustainable long-term profitable journey.
Right. So maybe you wouldn't give me a number, but do you think it'll breach that 63 to 65% number in the coming quarters?
See, we are in the middle of the year. It becomes very difficult to predict claims, when there is a epidemic like this, which was quite intense. So we are doing our best to ensure that, we bring it closer to the guidance, and we're working on it. But very difficult to give a number as of now. So, in terms of expense ratio, while it was higher in the first half, it typically is higher in the first half. With growth in business coming in the second half, we are looking at certain operating leverages to the tech and digital spends that we have done. So expense ratio is something which will close to our last year now.
So another question I'll ask you on the same front again. If you've clearly said that you will try getting it as close to the guidance in terms of the claims ratio, right? How long do you think it'll take to come back to that number, what you've guided for?
Typically, loss ratio is a function of the year, and it's a function of the medical claims which are higher because of epidemics in a year. But on a sustainable 3 years, 5 years journey, we are well confident of operating in a particular loss ratio range, which will give us a long-term ROE of close to 20%. So that's what we are working towards.
Okay. Additionally, with this, taking the negative aspects into consideration, do you think a change in the product mix with the distribution channel that you have been eyeing? Because overall, you've added around 40,000 agents so far in the first half, expecting to add another 60,000 agents in the second half of FY24. So, from the agent addition to the product mix, and if you have to look at the solvency profile, all of this put together, how do you think will then pan out? Are you seeing any change happening on any of these aspects?
Yeah, so in terms of distribution channels, digital and banca is growing faster than the agency growth. Around 32% of the new business is coming from digital and banca channels. So we are looking at diversification of our overall portfolio in favor of profitable product mix like benefit products in banca channel. So what again we are looking at is some price increases also in our portfolio. Certain products have reached a loss ratio where we are looking at a price increase. So around 15% of the portfolio will undergo a price increase. We had taken a price increase last year as well. So price increase is taking place. We are moving into the profitable product segments of digital bank. Agency also we are trying to grow in profitable locations. We are defocusing on some of the loss-making locations. So all these factors will ensure that it's a healthy portfolio which will give us a profitable business.
Okay. And from a FY24 perspective, what do you think are the key monitorables according to you?
So the key is the growth in business, the combined ratio, which is again a factor of loss ratio and expense ratio. And one more important factor is the investment income. Today our portfolio is 14,000 crores. With the rising interest rates, we have done some investments in ETFs, rates and weights as well. Our investment yield is improving, which is contributing in a very big way to the profits of the company. So these are broad, parameters where we focus on growth and profitability.
Right. And from I wouldn't say a guidance perspective, but the next milestone that, the company wants to actually achieve, if you have to look at the next, say, 12 to 18 months to another 36 months.
Yeah. So, see, in the long term, what we are saying is we'll continue to grow at 20% plus, which will be higher than the industry growth rate. The industry is expected to grow anywhere between 15 to 17%. We'll continue to improve on our overall market share in retail health business. Today, as on 31st March, it was 34% market share. We want to improve on that. And this is a profitable line of business, retail health. So as long as we are able to price the products well, we have the right channels, we'll have a profitable business in terms of combined ratio, and which will give us a sustainable ROE of 20%. One more important thing which is happening in the insurance sector is the introduction of IFRS accounting. Today, the accounting is such that the cost is upfront, whereas the earnings come over the policy period. The industry is looking at moving towards IFRS accounting, where the cost will also be deferred over the policy period. That will show the true profitability of the business. So from the current levels also, if the business is showing a ROE of say 16 to 17%, actually it is an ROE of 19 to 21%. Depending upon the growth of the company. So this will get introduced effective April 25, and that will also reflect the true profitability of the business. So a lot of factors to look at, in the next 36 months too.
Okay. So clearly, what's the aim with regards to market share from now? To what level do you think you will be able to take it to, say, in the next 12 to 24 months? That's one part. And second part is, will the second half then 100% be better than the first half of the year?
Traditionally, if you look at it, the second half of the year is better than the first half because the business is concentrated in this quarter four. The impact of the epidemics is lower in quarter three and quarter four. So that's historically that's the trend which we have seen, and hoping that it continues in the current year as well. In terms of market share, I mentioned that we want to grow at 20% plus, whereas the industry will grow at 15 to 17%. So we'll gradually keep on improving the market share every year.
Okay. And lastly, a 20% growth in terms of 24. Are we still on track for that?
Yeah, we are working towards it.
Right. All right, Nilesh. Thank you so much for speaking to us at BQ Prime. Clearly, if you see, from a business perspective as well, the commentary looks pretty strong as we speak, but it's the claims ratio which is a downer right now. Expenses have gone up, but that should moderate as well. The company is saying that they will try to come in as close to that what they've guided to, that 63 to 65 percent mark. But from a stock price perspective, again, a pretty flattish move in today's session. 1 month, the stock has lost around 7%, YTD as well, on a 1 year basis, 18 to 19%. So, no major moves, a pretty volatile ride with regards to where the insurance player is concerned. So, that's the management of Star Health. That's all that we have on this session. Thanks for watching, and lots more lined up on the other side. Please stay tuned to BQ Prime.